What for you is the biggest concern economically at the moment? Is it trade tariffs?
I think right now one of the biggest concerns, one of the main sectors that we're watching is the housing market. The housing market is throwing up a very large red flag, in our opinion, suggesting that maybe this 4% gain that we saw in the second quarter is not sustainable.
Okay. Which part of the housing market, what number, home starts, home purchases, average price, which number is giving you some concern?
Well, I think there's several. If we look at home sales have actually been on the decline for 5 of the past 6 months, but also one of the biggest concerns is that as we're seeing home price appreciation continue to rise, incomes are very stagnant. So we're seeing a growing divide between the cost of a home and the ability for the average American to afford that home purchase. Now, we're not there yet, but eerily similar to what we saw leading up to the housing crash.
Right, but that only is relevant if people are over leveraging to borrow to meet that differential. If all that's happening is people then move to the rental market, which is what used to happen in the old days, then that sort of solves the problem.
It would solve the problem. We're not seeing that yet. We're seeing consumers taking on a considerable amount of debt, continuing to ratchet that higher and higher. In fact, we've seen debt now reach the highest level in the past several years.
Let's talk about this. How did this happen? How? Because, sorry, I know it's a naive question, and maybe we should be a little more detailed in this program, but at the end of the day, those of us who've still got the scars of 2008, 2009, who covered that crisis, how did we end up 10 years later with debt levels almost at record levels and debt being a problem again?
Well, I don't know if we learned our lesson during the Great Recession. A lot of consumers felt as if they got a little bit of a bailout. They got a helping hand. They walked away from their home purchase when it was underwater. So I don't know if we really felt enough pain for the psychology of the consumer to change. And we went right back to the borrowing patterns that we were used to prior to the financial crisis.
So what should we look forward to now as we look at the housing market in terms of, providing the bonds and the sub-bonds and the mezzanine bonds underpinning these things have been properly insured and properly distributed, then this should not be systemic risk. And macroprudentially, we should be okay.
That's a good point. But again, when we look at how consumers are borrowing, we are going back to a lot of the easy lending conditions that we did see. 0% down is becoming more and more fashionable. Now, we're not necessarily back to the no-doc days that we once saw, but 0% down does suggest that maybe they're not properly leveraged.
Are you acting as a canary in the mine for us today?
Well, I do think there's concern for the U.S. economy, not just from housing, but from the consumer, from business investment. There are signs of waning momentum, still positive, but we're losing momentum.
Join me, Richard Quest, on CNNMoney.com each Wednesday at 12:45 Eastern.